Well, the reason why I ask is I wonder what you think about these social networking companies.
Obviously, those people have seen a product that, in effect, the customer didn't see to himself until he signed on. So you got to admire. I mean, I admire Steve Jobs and people like that when they see something that the customer hasn't yet seen. Henry Ford did it with the car. I mean, that's impressive.
Do you get a sense, though, that these companies are driving a technology bubble, another one?
Not necessarily a bubble. The public drives the bubble. If you got Jeff Bezos or Mark Zuckerberg, they go about doing their business very well every day. If people look at them and say, there must be a whole lot of other tulips around, and therefore I'm going to buy any tulip that comes along. It's people and greed that form bubbles. It's not the guy that really turns out the product.
But do you think that that's what we're seeing in some of these valuations? I mean, Groupon at $20 billion, Twitter at $7 billion.
Anytime you see companies that were worth nothing a few years ago become worth 50 or 100 billion, you are going to get people very excited about the fact that they can pick the next one. And you'll get brokers that promise them that they can tell them what they are. And you're going to get a lot of people that are disappointed. Not that easy to create a $100 billion company.
No, I mean, have you, Warren, ever been tempted? I mean, have you been, because I know you read through, you love reading all this, the data, and you read through annual reports and also filings. Have you been tempted to read through any of the S1s that these companies have filed?
Oh, yeah. Matter of fact, I asked a couple of them to send me S1s.
Which ones?
Well, I asked a fellow the other day. He said he'd sort of copying his company on Berkshire, so I said, well, send me the S1. Maybe I'll ask for a royalty.
You mean he was looking at IPOing his company?
They are, yeah.
They are. Can you say which one?
I shouldn't quote him, yeah.
But has there been anything, I mean, have you read the Groupon S1, for instance, or the Zynga S1? I mean, I want to get your take on what you think.
I will. I will. Mm-hmm.
And what would you look for in that?
I just find it interesting. I mean, these people have developed very interesting businesses, and a lot of imagination and some scale. And no, I read S1s like other people read Playboy. That's what happens when you're 80.
Okay, and I'm looking at that chart right behind you. It does look as if equity futures have gone down, have tanked on this ugly, as Lizzie was describing an ugly report. You can't describe it any other way. Warren, 18,000 jobs only. Mm-hmm. What do you make of this?
Well, it means that we're still a ways off from getting to be where we should be. But what was the unemployment?
But you're an optimist, right?
Oh, sure. What was the unemployment rate in February of 1950? I don't know. All I know is I bought some stocks that have worked out very well subsequently. It's obviously of enormous importance, to the American economy over time. But we went through in the fall of 2008. As cataclysmic a panic that spilled over, and the financial panic spilled over into the economy, as you can imagine. That's why you had those minus 700,000 figures there for a while. Mm-hmm. That doesn't turn around in a week or a month or even a year. And on the other hand, we are coming back. I can tell you that from our businesses.
Something like this, though, Warren, makes it a lot harder when you're then talking about the debt debate, right? It makes it a lot harder when you're talking about President Obama being reelected, when you see a jobs number like this.
Well, he would not like the election to be held today, I'm sure of that. But in terms of, it's a long time between now and next November. And it will depend really on when housing comes back.
Okay. Right before this, I know you had thought maybe it might even come in a little bit more to the upside, though. I mean, nobody, no. and to everybody's credit, I mean, nobody had thought 18,000 that it would be this big of a miss. Mm-hmm. I want to turn now, though, to Wall Street, because this is part of the economic story and part of the job story, Warren, which is banks and regulation. Simon Johnson, who's been on our program quite a bit, and I know a name that you know very well, has said that too big to fail is still here, that these banks that we've got have only gotten bigger, and that they're basically government-subsidized entities. Is he wrong?
Well, I don't think there's any question. There's a number of institutions that are too big to fail, and we may be seeing that with countries that we're certainly behaving, or Europe is behaving as if they've got a problem with too big to fail, and.
Is Greece too big to fail?
Well, that's what we're Greece is certainly too big to fail from the standpoint of the Europeans if it's going to cause a lot of other people's to fail. Okay. It isn't. When people talk about too big to fail, what they're worried about is the next domino, right? And will it tilt over other dominoes? And we decided in this country that Freddie and Fannie are too big to fail. Mm-hmm. There will be institutions and they may be government related, where the feeling isn't so much that they're too big to fail, but that it's too big. They're too big to fail without toppling others and getting a series of dominoes going, which was the problem that we had.
What's the difference, though? Is there a difference?
Well, if Lehman could have failed in a vacuum, that would have been one thing. But we learned Lehman couldn't fail in a vacuum.
Now we know, though, that aside from with the regulation debate, we know that you've quite admired, for instance, Lloyd Blankfein, who's steered the bank through the crisis. What about Jamie Dimon? He steered the bank through the crisis pretty well.
He's a fabulous banker, and he probably writes the best annual report in America. And I would advise everybody.
I think he models it after you.
No. I grab his report when it comes in, and my friends do too. Now he is a very, very smart banker, running a very big bank.
Have you thought about buying into it?
No, we own stock in Wells and USB and M&T, and banking is not going to be as profitable in the future as it has been in the past. Now it can still be plenty profitable, but you make money in banks on assets, and you can have less. You now can have less assets in relation to capital. You can have less leverage, and
because of these capital requirements.
Yeah, and so the very nature of it is you'll earn less on capital than was the case a while back. But you can still earn pretty good returns, perhaps.
But you think, though, overall for the health of the economy, these capital requirements are good?
I think reducing leverage in the financial system was a good idea. Leverage causes a lot of problems, and there's a great temptation. And when you have the federal government, in effect, backing your deposits so that people don't have any reason to exercise their own judgment as to whether your leverage is too high, you need some leverage requirements.
But a lot of these banks, though, Warren, and you are famous, obviously, for promoting value investing. I mean, a lot of these banks are trading below their book value. There's got to be a bargain here or there.
Well, I hope so. We own a few of them. Some of them, when they talk about book value, though, some of them, there's a difference between tangible book and stated book. And you earn money on tangible book, not on intangible. I mean, you can earn money on some intangibles, but basically there are a lot fewer that are selling below tangible book than are selling below their stated book.
Okay. Well, Goldman, we know, is one that you did invest in. During this, you had the preferred shares.
We bought preferred shares, and we've got warrants left. They called our preferred.
And yesterday, you also said that that you were going to exercise those warrants, like you said you would, in 2013.
As long as the stock's above 115.
Well, that was my question. Is would you exercise them any earlier if they did obviously fall below that 115 strike price?
Well, there'd be no reason to exercise them at all if they're below 115,
right,
because they have no value.
Yes,
but no, the answers were very, very likely. Well, we'll only exercise them if it's above 115. I would expect it.
Okay.
It's likely that it'll be above 115. We will exercise those warrants very close to their expiration date.
Okay. So can we defer from that? Can we infer from that then that you expect that stock price to rise, or at least, again, as you say, stay above 115 until 2013?
Well, I think there's more chance that it will than it won't, but stocks can do anything.
Right. And the economy can do anything.
Yeah, and they have.
Getting back to regulation, though, Elizabeth Warren, a lot of controversy there about her being consumer finance chief. What is your view on her?
Well, she's made a lot of enemies, obviously, but we needed a lot of correction. And I mean, when you see what happened in the mortgage issuance market of 5 years ago, a lot of things took place that shouldn't have taken place, and it's up to both the industry and the government to correct it. I mean, it's great if the industry does it by itself, but it's clear you need a policeman, and she's a pretty good policeman. Well,
I mean, what has she done so far that you think has been the right thing?
I can't follow all the details of it, but the main thing to do, in the end, you want people to take out mortgages where it's appropriate for them to do it, and where they know what they're doing, what the paper they sign, and where they can handle the terms involved in the paper they sign. You'll always have people that lose jobs or there are deaths or something, so you'll have some foreclosures. But you should not have masses of people entering into transactions that they don't fully understand.
Right.
It's such an important transaction in their life. I mean, it's huge. So there's a real job to be done in making sure that people both understand the contract they're getting into and can handle the contract under most circumstances.
Well, aside from Elizabeth Warren, Tim Geithner, obviously, is part of Obama's economic team. There was some news out last week that he was possibly going to step down. And
I hope he doesn't. I think he's terrific.
Well, I was going to say, would it be a big blow if he did?
Well, it would depend on who succeeded him in a number of things. But Tim Geithner, we are very, very fortunate that Tim Geithner has been there during this period.
You've often been talked about that if there was an ideal candidate to replace him or to be Treasury Secretary, you would be. No. Would you ever do it?
No. No. It's a thankless job, and I've got an easy job now. Why would I trade? What
I want to talk about first, though, is the person that's left Berkshire, David Sokol. It's been a few months since the annual meeting when you pretty much laid out what happened. What's happened since? Have you talked to David since?
I talked to him twice since the press release. Once he was on CNBC the next day, and I talked to him that day for a minute or two, and then about a week later for a minute or two, and that's been it.
And that's been it.
Yeah.
Okay. Have there been any more inquiries from the SEC?
Well, there was an initial inquiry that was labeled informal and voluntary, and pursuant to that, I talked to them one time, and it was not a deposition or anything of the sort, but and it was labeled informal and voluntary, and I was glad to talk to him.
And was it the end of that? That was the end of it?
That was the end of it. Yeah.
Have you looked further into some of Sokol's other interests within Berkshire, like at Mid-American or BYD?
We haven't. We don't. Our audit committee looked to the extent they could, but obviously we don't have any subpoena power or anything like that. So presumably that may get looked at by somebody else, but we don't have that authority actually to do it.
Okay. David Sokol held a special role in some ways at Berkshire. He was somebody that you deployed sometimes when you were looking at deals. I mean, he was the one that helped.
He did a terrific job.
And he helped put together, the deal at BYD, for instance. Do you have anybody now in that sort of role? Or do you need anybody now in that sort of role?
Well, it's not exactly that role, but we've got managers that we've got a group of managers that I feel like I've got the 1927 New York Yankees. You may not be familiar with them, but Ruth and Gehrig and a few people.
I think I get the idea.
Yeah, no, we have an abundance of riches in terms of managers but Dave was a very good manager.
Well, Howard was mentioning a few names. I mean, Matt Rose is one, for instance.
He's a terrific manager.
I mean, is he somebody that you might consider, putting into other, into different types of roles besides?
He's doing pretty well where he is, but he could handle a lot of other things. There's no question about that. But he runs a very big business now and does it. He couldn't do it better.
What about Todd Combs? Has he started buying stocks?
He's bought just 2 stocks so far.
Which ones? Can't say.
I like the way you slide into that.
Well, MasterCard is one that we've been hearing about. Is that true?
Well, I think it showed up on a record that MasterCard was bought, and I'll put it this way, I didn't buy it.
Okay. Got the message on that.
Huge breakthrough.
Now, going forward, though, when he's buying stocks, does he have to clear them with you?
No.
How's the process going?
No. We have a little bit of clearance in the sense that there's a few things he couldn't buy. I mean, just because it'd be awkward. I mean, we wouldn't have anybody buy Microsoft because I'm so close to Bill that people would assume I was getting insider information. So there's just a few little items like that. But no, he can be buying stocks as we talk.
Okay.
Yeah.
And do you have any particular goals for him by the end of the year? Does he have any particular goals by the end of the year?
Well, he has designated a block of money, which he designated, and he can increase or decrease that block at his call. Okay.
Warren, I'm so sad to say that we have to leave it here, but thank you so much. I know you've got a breakfast to go to.
Yeah.
So very much thanks to Warren Buffett here for staying with me throughout the job.